Hey everybody, John Napolitano here with you. Hope everybody's doing well. Just wanted to talk about a topic that somebody recently brought to my attention, someone who had a question about a certain stock, one that I think I've never traded before, but it looked pretty interesting today. And it kind of reminded me of a broader topic to talk about, and that was basically how to handle something with a very high implied volatility in a low volatility environment. So basically, the stock that we're going to talk about today is a ticker called AI. It's an AI technology stock. I believe the full name is C3 AI. I really don't know anything about it. One thing you'll find about my style of trading is I don't do a lot of research on the names that I trade. I find that the more research you do from a trading perspective, uh, about the name and what the stock does and what the balance sheet and income statement looks like, what you're doing, you're getting into investing. You are not getting into the world of trading. So that's very important to kind of separate your two worlds when you're making decisions on trading. The most important thing to really realize is what strategy you're going to use and what direction the market and what direction the sector and stock that you're trading is going in. So all the research and all that other stuff is great, but it doesn't necessarily mean which direction the stock is going to go in. So this particular stock is obviously in a very interesting sector. It's in AI, artificial intelligence. It's in the technology sector. So tech has been weak, not recently, but it started off weak earlier in the year, and it's been getting progressively stronger and stronger. So the Nasdaq's rebounded from the lows in December and in the fall, and this stock is no different. So I'm going to share with you my screen. I'm going to show you what this stock actually looks like if you're not too familiar with it. And you'll see that it's gone up quite exponentially. I'm on the daily chart right now. So you'll see that basically ever since the beginning of the year, it's been on a tear. And today it lost about 8%. I think it's in this kind of battle with Google, I think, is as far as AI goes and everything like that. But how do you trade a stock like this? What's interesting is, on the way up, especially in the options market, it could be very challenging. So on the way up, it's obviously went parabolic. It's very hard to go chasing something like this, and it's also very hard to short something like this too, because it could keep going higher and higher. I want to point out something else. What I'm going to do is I'm going to split the screen here, and I'm going to show you guys what the weekly chart looks like so you could get an idea of just how strong the stock used to be. So on the right-hand column, I'm looking at the weekly chart. So several years ago, this was a $180 stock. It is now a $21 stock. So just to put things in perspective, if this stock, let's say, was to rebound and continue to go higher, the sky is sort of the limit. I'm not saying it's going to jump right back down to up to 180, but the potential for it to skyrocket and go through the moon is definitely there. I don't really know much about, like I said, I don't know much about it. I don't know why it had such a downturn. Obviously, the whole market rolled over. This was probably caught up in that as well, and it's probably was just overpriced to begin with. So it is kind of interesting to see it in this early stage uptrend on the left hand column here on the daily chart. So as far as like a target, this is one of those names where you really can't have a long-term target. Could be really anything. In the short term, however, you could start picking spots and say, well, it looks like maybe it'll try to get up to these areas here, maybe 26, maybe even 30 is a psychological number. So you can start picking spots on the daily chart. I'm going to shrink this now just so you can see the perspective and see where this stock was. So now that it's pulled back 8%, it's starting to look interesting because it's still kind of maintained its uptrend. It's obviously let off some steam. My next question is always, when is earnings? So earnings are going to be on March 2nd. So we have the entire month of February to kind of speculate on a momentum play here. So again, this is about, I would say, a good 10% of what I do. I generally follow trend, I follow momentum. What I like about this is that this thing is actually still in an uptrend. So I generally don't do momentum trades. I'm a trend follower. I like to let my trades play out over several weeks or several months usually. This is something you can kind of play on the short side, on the short term side. as well as the long-term side. And what I mean by that is you get to pick. So when something trades with a lot of volatility, when something trades in a very sporadic, in a very volatile way, you could either play the very, very short game, which means you're going to play into earnings in the next couple of weeks, or you can play a longer term play, which will help you sit through some of the volatility that might see, come March 2nd. So that's a strategy that you have to think of in terms of options trading. What is your ultimate strategy? How long do you plan on sitting through this trade? What is your time frame? It's such an overlooked concept, and it's one of the things we talk about in our classes. So always start with 5 things, and I talk about this all the time in my classes. You have to start with what your target is. If your target is 30, fine, that's your target. If your target is 180, that's fine too, but you have to have a target in mind. You also have to have an entry in mind. So maybe right now 8% is enough for you. You think it's going to not go down much more, and you want to get in at current levels. Now, it does trade quite in a volatile way, so getting in now would maybe make sense. Or you might want to wait for it to hit a moving average and bounce off. You run the risk then of never getting into the trade versus getting a better price. So price improvement is great when you're picking entries, but the risk of price improvement and waiting for an entry, an ideal entry, means you might miss the trade entirely. So just keep that in mind when you're setting up your trade. If this is something you really want to get into, go for it, right? Otherwise, your entry price should be somewhere around a moving average, or maybe wait for a confirmation that it bounces off of that moving average. The next thing you're going to do, you obviously want to figure out your stop. Now, in the case of a speculative name going to earnings, always talk about figuring out what your maximum loss per trade should be. In the case of a trade like this, I would highly recommend going a lot less. So if your normal risk is a certain amount, I would go with half or a quarter of that, because this thing will move on you. It's going to be one of those heart attack trades. So you don't want to have an oversized position in one of these types of trades. That's something to keep in mind too. So target, entry, stop, your time frame. So when I said, do you want to sit through this and see if it goes to 180? That certainly means you're going to sit through this past earnings, and you might decide to sit through this trade for several months to see if it tries to regain some of these higher price levels. That is not going to be an easy ride. It might take you several weeks or several months. There are option strategies that we teach in our classes called the poor man's covered call, for instance, where you can sit through a leap. You can buy a 1-year or 2-year option and sell premium against it. You have to know the right strategy. You have to do it intelligently. We teach that in our boot camp. We teach it in our classes. We teach it in our coaching calls. The next thing you can do, again, if you have a shorter time horizon and you just think it's going to maybe hit 30 into earnings, maybe a quick 20-30% pop, then you're going to pick a different time frame. So the last T in test is your time frame. Finally, and last but not least, is the S for sizing. So TESTS. How big are you going to be? So obviously your stop is important, but you have to have ultimate sizing in mind as well, especially into earnings, because you have to assume your premium might completely go worthless if there's an earnings surprise, or if this thing really takes a nasty tumble. So these are things that we talk about in our classes. That is how you handle a trade like this. The next thing you want to do is obviously analyze volatility. If you look at this, the implied volatility is very significant. It's in well over 100% here. For the February 17th, obviously all these are prior to earnings. The vol just keeps going higher and higher. So you have to consider what your break even is for the trade. If you go out to March 3rd here, which is right after earnings, let me just go here and show you guys. The implied volatility is something at around 150, 160%. So it's currently trading at $21. If you buy the at the money options, you're paying about $3 for those options. If you think about that, this stock has to go at least to $24 to make any money. So think about that for a second. That is basically a more than a 10% move in the stock price. So in order to make any money, the stock has to go up 10%. Now, most stocks do not go up 10% on any given day or any given week. They go up a couple of percent here and there. So obviously there is a very big outsized move priced into these particular options. So as a rookie option trader, you might buy the call options thinking that you're going to make millions of dollars, and the stock might only go up 5%. And if that happens, you're going to lose all of your money. So that is why novice option traders tend to get very frustrated. They tend to not do well because they're not picking the right strategy for the right situation. So when you have volatility this high, you have to have a better plan other than buying straight calls or straight puts. You need to put together a strategy that allows you to sit through volatility, to profit from volatility, and to still be in the trade for the long haul. So these are all strategies, like I said, that we talk about in our boot camp. We go through it in our coaching calls. We go through it in our Discord sessions. And I am here to answer all of your questions. So I hope this was helpful. I just wanted to point out a really interesting trade that we're going to be looking at in the next couple of weeks in our boot camp class and in our Discord channel. And these are the things that we do. So if there's any interest, if you guys want to learn real options trading, how to do this the correct way, spend some time with us. And I'm really looking forward to seeing you guys. Okay. Have a wonderful day, everybody. Happy trading.